Okay, so the next topic I want to cover would be, I guess, more so on the alpha side, and I guess not. It doesn't have to be too specifically to reimagine, but maybe we could talk about tips for investment management overall for someone with like a portfolio of 0 to 10K, and then someone with the portfolio of and over that. You're on mute, by the way.
Oh, sorry about that, Kasim. Yeah, so if we start with 0 to 10K, which I think is the majority of retail participants in the crypto space, my advice to my family and friends on that is a fewfold: not to overtrade, because the amount of fees that you'll be paying as a percentage of your portfolio if you're going in and out of positions all the time is going to add up in percentage terms. You like, let's say you've got a $10,000 portfolio. Last thing you want to do is pay like $200-300 of fees, because you've already lost a significant portion of that $10,000 portfolio. So number one, not to overtrade, because you do have entry costs, exit costs, especially if you're doing anything on Ethereum mainnet, or if you're doing swaps on Uniswap, for example. The other thing is liquidity is quite thin at the moment in a lot of tokens, so you can end up paying quite a high level of slippage. Let's say you buy $1,000 of a relatively illiquid coin on a decentralized exchange. You can end up moving the price materially against yourself. So, not to overtrade, and be aware that liquidity is quite thin, and think about those before you build a position. And then have real conviction in the things that you do invest in. So, what I would do if I was that kind of investor is I would have some benchmark exposure, so buy a little bit of ETH, and then I would research deeply a couple of projects that are narrative based. For next year. So, next year, you're going to have some narratives around liquid staking derivatives, around GameFi, around real yield protocols, and then find projects that fit those narratives and go and explore them. Look into their discords, go and connect with the founders, ask questions on Telegram, be active on their Twitter spaces. Discord in particular is amazing because it's a real treasure trove of kind of alpha. And often, like I did this recently with an investment in something called Deus, Deus. I was following what they were doing in a migration from V2 to V3. I asked a whole bunch of questions on the Discord. I had some really kind of positive takeaways from that. And then to really clarify my own thinking, I actually just created a thread um, on Twitter and just started creating content. And often, like if you write out your own investment narrative and your own investment thesis, you can see where the gaps are in your own knowledge before you make that investment. So as I was writing that investment thread about Deus, I realized, oh, I don't actually know what the FDV is, the fully diluted value, and I don't really know which brokers that they've onboarded for their protocol, and I don't really know how many assets are going to be tradable. And I had to go away and find the answers to these questions. So it's almost my biggest tip for anybody is to have high conviction, and the way that you have high conviction is try and explain why you're buying that thing in thread format to the world in a public kind of way, and you'll slowly be able to either build or lose conviction in something. And then, yeah, concentrate your positions. I think if you've got a relatively small portfolio, you want to have maximum 5 or 6 positions at any given time. For somebody with a slightly bigger portfolio, I think it all depends on your risk tolerance. Between 10K and 100K, I think depending on how much time and research you want to do, you should have a core holding, maybe 25-30% of your exposure in Bitcoin and ETH, 25-30% always in dry powder for buying any significant structural dislocations in the market. Like if you see a 20% decline in a day, because of some kind of liquidation cascade, to have some dry powder to buy those dips. And then the rest of it, again, just a research driven, high conviction thesis, hold 5 or 6 positions, whether that's in certain farms or LPs or individual spot exposure, and buy that. And then above 100K, I think you can start to look into more exciting opportunities across DeFi, getting involved in some of the flywheels, whether it's Curve, Convex, or Balancer Aura, some of the leverage vaults available on things like Notional Finance, which make a lot more sense over 100K, again, due to fees and slippage. And doing things in the options space. Once you've got a portfolio of 100K, you can think about selling options
Nice.
using something like Deribit.